There's another stock that we're tracking very closely today, and it is GMM Pfaudler. Right now down by about 5% in trade, but let's just talk a little bit about GMM Pfaudler. It lost about 50% in stock value since it decided to acquire the global business. You've seen an OFS also come out criticized for its pricing. Here is the top management, the managing director, in conversation with my colleague Ajay Sharma on all of the issues that have been concerning the market.
People need to understand that there is a private equity fund that sold us the Pfaudler International business that still holds 51% of GMM Pfaudler. This is DBAG. It's a private equity fund. It's a financial institution. It has a kind of a lifetime in terms of how and when it invests in a company. They've been part of the Pfaudler group for 6 years now, and they definitely wanted to monetize close to 25% of their stake. Part of this transaction, they also sold us the Pfaudler International business. That's very important to know this part of this transaction as well, at a very lucrative valuation. So we got a whole international business of close to 175 million for close to only an equity value of around 50 million. So we got a great deal on that. We believe that there are tremendous synergies between both these businesses going forward, and hence we facilitated DBAG to sell their stake here in India. It's important to know from my personal family standpoint, we are only selling 2%, which is close to about $13.5 million. And all this money is going back into the international business where we are acquiring 26% stake. So the promoters are not exiting. There was a lot of talk saying that promoters are going to cash out. The Patel family remains a strategic long-term investor in the business and has no plans of the cashing out. DBAG, again, just to reiterate, is a financial sponsor, is a private equity company, will eventually leave the company, but currently they still retain 25%. One more point to clarify here, it's very important for most people to understand, as part of this OFS, both the Patel family and the private equity company, DBAG, will be locked in for a period of 3 years. So there's no further selling of any stake sale. There is no further OFS. The next 3 years are going to be basically put your head down, work hard and create value, turn around the international business, and make sure that all the improvements flow into GMM Pfaudler. Now coming back to the pricing mechanism, you have to understand again that this is a very niche business. Not many people know about Glass-Lined, know about GMM Pfaudler. It's a small cap, so it's really like a re-IPO. Even at the current price that we have priced the OFS at, 3,500, it is still 72 times price to earnings. So that is still a very high PE number. We believe that this is an attractive value for both the promoters as well as new investors coming in. Let me spend a minute to also tell people about the kind of and the quality of investors that have subscribed to the story. These are really high-end, long-term the investors out of the US, the top mutual funds in India. They have bought into the GMM Pfaudler long-term story. They believe that the tailwinds in the chemical and the pharmaceutical sectors are very strong. They believe that there are significant synergies to be extracted between both these the businesses joining hands, and they believe that we can create significant value for all stakeholders over the next few quarters. So our company's business fundamentals don't change overnight.
Sure.
Our market, the leadership, the position, our quality levels, our the governance structures, those are something that we are very proud of. Our ethics and integrity is something that we stand by. We've been promoters of this company for 60 years, and I don't think those things are going to change overnight. So from that standpoint, obviously we are very happy with this transaction. DBAG is also very happy. They remain committed to the business. And as I mentioned earlier, when we are buying 26% in the international business, we are also showing the commitment to other stakeholders that we believe in the business and we believe that we can turn it around. So that's basically what the transaction was all about. And obviously now it has ended. The OFS yesterday was oversubscribed by 120%. And even today, we saw about 80% subscription in the retail. And looking at the global climate in terms of the economic situation and the current global markets, to get this kind of response, I think that's something that we're very happy with.
Right. Right, Mr. Patel, it's very reassuring to know that high quality blue chip investors have participated in this OFS and even the Patel family completely remains committed to it. I want to understand from you, for Indian investors, up till now, GMM Pfaudler India was an India chemical story play. And probably that's the reason it caught the fancy of the investors as well, especially in the last 1.5 years. Now they also get European business alongside after this transaction. Can you tell us, are there any risks associated with European business? Many of them are saying that it's a low margin business in trouble, may take time to turn around. Was it really worth it? Can you explain the rationale to those investors who also, to Indian shareholders who now get a European play as well? Because, there are many companies in the agrichem space which have really gone global and Europe and really not had the taste of the same kind of success. So if you could just explain the rationale buying out the global business and what was the thinking behind it?
Sure. So I definitely want to prove the doubters wrong. I want to be one of the few companies that actually changes this trend of Indian companies who went abroad and acquired businesses that didn't do really well. I think what works in our favor, Ajay, is that firstly, we know the Pfaudler Group for the last 30 years. We've been partners since 1988. We work closely with DBAG and we work closely with the management of Pfaudler for the last 5 years. We have a very clear idea and long-term vision of where we want to take this company. There's a lot of hard work to be done. I'm not denying that. But there are definitely synergies to extract. We have India as a low-cost manufacturing hub. We can use India to kind of export into different regions where Pfaudler is not very strong. Pfaudler has done a lot of bolt-on acquisitions and new products that we can bring into India. So there are a lot of synergies that we can extract, a lot of strengths that we can work on. This company together will become the world's largest producer of Class 9 equipment, anti-corrosion equipment. We will be the market leader, and I think we can go from strength to strength. And we have shown that here in India. We've turned around the India the business since 2015. You've seen a kind of double-digit growth rate. Our profitability has gone through the roof as well. So we are here to work hard and turn around the business, and I have no doubt that we will be able to do that. I also need to just add here is that a significant amount of work has already been done at the international. You will see a lot of improvements flowing into the GMM Pfaudler, the accounts in the next few quarters. DBAG has spent close to $23 million modernizing 3 key facilities, one in Germany, one in China, and one in Italy. They're going to give us additional output. They are much lower in terms of cost structure. And that's one of the reasons why we did this transaction now, before all these improvements start flowing through. So you will see a lot of improvements coming in. We have a very clear idea in terms of where we want to take this company. There are other opportunities when it comes to increasing the product the portfolio through acquisitions, to new technologies coming in as well. So from a business standpoint, we are very, very confident that we can turn it around. And India continues to remain very strong. We've already had a very strong Q1. This entire year, the order book is pretty much done for this entire year. Q2, Q3, and Q4 are going to be very, very good. We expect the same kind of growth rates that we've been enjoying for the last couple of years, in spite of having about a 25-day shutdown because of the COVID pandemic.
Right. Mr. Patel, it's very reassuring that you're talking about a lock-in by the promoters. You're also talking about, the way you will be able to turn around. And this entire transaction, the OFS was only about for this transaction. Can you just explain for Indian shareholders' sake, what will be the shareholding pattern of the company now after this entire transaction actually is executed? And what will be the assets this Indian balance sheet will be holding?
Right. So once this transaction has been completed, we as a family, the Patel family, will be holding close to 22% stake. DBAG will be around the 25 to 28% stake. The public shareholding will increase significantly. We are bringing good quality investors in. Like I said, we are changing the face of the company, institutionalizing the company. There will be much more free float. There will be robustness to the stock. There'll be transparency. So that's something that we've always wanted to do. The biggest complaint we have from investors, GMM stocks are not easily available. So this will definitely bring a lot more visibility to the company. The public shareholding will be in excess now of the 50%. So that's what it's going to be like. And at the international level as well, GMM Pfaudler will own 54% of the international business. As I mentioned earlier, we as a family will be investing about 26% into the SPV, and DBAG will also be holding 20%. So there's complete alignment. The three partners remain completely aligned in both the international business and the India business. And eventually, after we create value 3 years down the line, we would then look at GMM Pfaudler owning the entire 100% of the international business.
Now let me shift focus and talk a little bit about markets, just to understand the price at which you must have spoken to a lot of potential investors when the book was getting built, your advisors from the banking industry too. Were you getting a sense that such a big block was the demand, potential demand was coming around this price at which it is being executed, and hence the steepness, and probably market price was not reflecting the real fundamentals? The market may have gone a little ahead of what the real fundamentals are, and hence the pricing arrived at that time. Is that the message I'm getting from you?
So I don't really want to really comment on what the market does. Let me tell you that if you look at really the price 1 year ago, it was half of 3,500, right? So our stock has moved up significantly, and that's a problem with an illiquid stock as well. You know, sometimes if they put in a large order to buy, the price runs up. If you put in a large order to sell, the price goes down. So one of our thoughts was, as we really move into from a small cap to a mid cap, as we grow the business, we really wanted to bring in high quality investors, make this stock more affordable and more attractive for more investors to come in to participate in the growth story that we have planned. And that's something. But in terms of obviously the price, at 6,000, the PE was close to 123, 124. Not many companies enjoy that kind of valuation. Even at 3,500, it's about 73 times FY20 earnings. So it's still a very good valuation, in my opinion.
Sure.
But going forward, I still believe, and even the new investors coming in, there's going to be significant upside as well. So I don't see a lot of problem in terms of the improvements coming in, and then how the market reacts is anybody's guess. But I'm sure that as we continue to do well and improve our the performance, the market will probably reward us with a probably higher stock price.
Right, Mr. Patel. Leave us with just one, question I would like to ask you is a little color on how the fundamentals are looking. Would you like to drive a message that fundamental outlook of the company has not really changed materially? If you last time we spoke to you, said order book is blocked for next 1 to 2 years. How are things looking right now? What's the visibility on business front?
So, I completely want to reassure everybody that there is absolutely nothing that has changed in terms of fundamentals of the company. Both the chemical and the pharma sector are continuously investing. The tailwinds are there. Chemical has been strong. Now we are seeing a lot of traction in pharma as well because of the COVID crisis. We are seeing a lot of people looking at creating local supply chains. It's also showing up in European and US markets, where we are seeing those countries also create some kind of the redundancies. So I think overall, the next 3 to 5 years for GMM Pfaudler and the Pfaudler Group looks very, very strong. Business will continue to grow. And, as a market leader, as the global leader when it comes to glass-lined, I think we can go from strength to strength. So from a business standpoint, I see absolutely no issue.
Okay, well, on that note, we'll take a very short break right here on the show. Don't go anywhere.